Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN AM for Tuesday, September 8th, 2020. And our top stories today, we'll take a look at the payday lending industry and then discuss how fintech can disrupt the industry. Well, joining me now to discuss this and more is Daniel Klein. He's Senior Technology and Consumer Products Reporter with The Motley Fool. Hey, Dan, welcome back to the program. Great to see you this morning.
Thanks for having me.
So what I want to do in this show, what we want to do collectively in this show is break down payday loans. And we'll talk about some of the pros and cons. Why don't you break it down for us, though? Why don't you start?
So there are no pros. This is all cons. This is an entire industry set up to take advantage of the most vulnerable. So here's what a payday loan is. It's Jeff, you've worked and you put your 2 weeks in, and they don't pay you for another week or 2 weeks, depending on the structure. It's a very outdated system. So during that interim 2 weeks, you run out of money. You're not making a ton of money, probably, if you're in this area, and you literally don't have the money for dinner that night or the money to pay your rent. So you go to a payday loan person who loans you money at a very high interest rate against your next paycheck. And in theory, if you pay it back at the next paycheck, it's bad, but it's not terrible. It's like credit card rates. The problem is most people get into that next 2 week cycle and They realize, oh my God, I'm short again. So they keep rolling over that loan and the interest rate compounds and compounds. And it could get to the point that it's hundreds of percents, that it is a terrible situation to be in. And the people who are doing this, nobody's doing it because they want to. Nobody's taking a payday loan, or nobody with even the tiniest bit of smarts is taking a payday loan so they could go to the movies. They're taking a payday loan so they could put food on the table or make sure the electricity stays on. So it's a real problem, and the industry that's snapped up around this, they've built a business to take advantage of people when they're most down. It's a deplorable industry to be in.
So make sure I'm understanding this correctly. I am taking a loan against my future earnings, and I'm paying and I'm getting money, whatever those future earnings is. I imagine you have to show a W-2, a pay stub of some type. You go in and they'll say, okay, we're going to give you the $2,200, but you're going to give us 8% or 10% or whatever that is of that as like a fee. And so the real concern is that you kind of can't get out from underneath it, just like you can't get out from underneath credit card debt or can't get out underneath type of other loan structures.
Exactly. But it's basically, say that 8%, 10%, it's that for the week. And then if you don't pay it back. So here's the problem. And I'm going to try to touch this without being political. There were a number of rules that were supposed to go into effect that would have forced payday lenders, and this is an important one, to make sure you had the ability to pay the loan back. So let's pretend back in my freelance days, and this happened to me once, when I was full-time freelancing maybe a decade ago, and certainly not making the money I'm making now as a contract worker at Motley Fool. I had a month where I billed $35,000. It was the best month I'd ever had. The problem was the client, which was a very reliable client, had a very slow pay structure. Let's say it was 60 days. So I got to the point where, while I'd had a really good month, I didn't have any money. My wife had a regular job, but we were behind. So I was lucky enough. I went to a friend of mine and I borrowed a couple $100 just to have some, not that I didn't have credit cards, but I was being really careful with credit cards in those days due to, very uneven cash flow. And I went to a buddy and I borrowed a couple $100 just to have, walking around money for the weekend or whatever it was. And then the check arrived and I was good. But imagine if I didn't have that money coming in. If I borrowed money from someone who was taking a big fee and they didn't even have to check if I had the ability to pay it back. Right now, that is how it works. So a payday lender does not have to verify your ability to pay the loan back. So somebody could come in and they could be making $600 a week and they could borrow $300. And you could see how quickly that can get into a very negative place. And these can be very aggressive. And we've talked about collection people with credit cards calling and harassing you. The payday lenders can be very aggressive. It's an industry that massively needs to be reformed.
Dan, what about the impact? I just want to kind of set this up with the impact, for example, to credit scores, right? Your credit worthiness, the so-called FICO scores, the 3 different credit monitoring services. Would this have an impact there as well if you don't pay your loan back? Or
eventually. It depends on whether they report or not. They have every interest in you having a low credit score. Because if you have a high credit score and you're in a time of trouble, you can get a credit card, and that credit card might not be, it's not the most favorable terms, but it's a much better term than a payday loan. And this is something that, wealthier people tend to miss out on. They say, well, you don't have any cash flow, just put it on your credit card and pay it back when you get paid. Well, if you don't have a credit card, or you have one credit card with a $1,000 limit that's already maxed out, you're not in a great position here. So these companies will, if they're being unscrupulous, report you to the credit bureaus to hurt your credit score. There are probably some rules about when they can do that, but I'm not entirely sure what they are. But in general, the goal here is to keep you in a cycle of borrowing money. This isn't your friend who helps you out. This is someone who is being paid handsomely to help you out.
Yeah, to me, just on the face, and I guess we need to have someone from the industry come on and explain more detail. It sounds very predatory. But this, I recall something we were talking about a few weeks ago, PPP loans, and we were talking about Cabbage, organization like Cabbage, which you borrow against future revenues in order to get your Cabbage loan. So it sounds like it exists for individuals, but also exists for small businesses as well.
So a PPP loan is different. That's the government loan,
right? But not the PPP, right? I don't mean, but I mean a Cabbage.
Yeah. So I'm not a fan of Cabbage, and we discussed that. Here's the one time it works. If you have a seasonal business, so let's say you run a garden supply company and your winters are really lean, but your spring is really good, you might get into a point in spring where you've sold a bunch of stuff, but the money hasn't come in yet, so you don't have the ability to replenish. That might be a case where paying a small percentage of what your receivables to a company like Cabbage to get the money, that's going to work for you because that's going to give you money to make more sales. Where it doesn't work is if you have a steady business, your business takes in $12,000 a month every month, and you're basically selling some of those receivables to get money to stay operating, it means you're operating at a deficit. So you have to do something to change that. The same thing is true of the person who's taking a payday loan. Now, if you need a payday loan due to some unexpected expense, you missed 3 days of work for medical reasons, or your car broke and you needed to spend $500 there, and you can look at it and say, okay, here's my plan for how I'm going to pay this back. Well, it's a loan of last resort, but at least you have a plan. It's when you don't have a plan. It's when you're doing it because you need to survive the day. And I totally understand that instinct. You push your problems 2 weeks down the road. That's great. On the other hand, it's not so great if you don't then go get a side hustle or figure out some way to make more money to get out of this cycle. That's true for businesses. That's true for people. If you're running at a deficit, you are eventually going to go out of business. And that is not great when out of business means no food and no roof.
Yeah, this to me ties back to education and literacy about finances, and you got to do that. Dan, I want to go to a quick break, excuse me, and when we come back, we're going to talk about disrupting this industry with financial technology. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
If you are like 58% of Americans, you didn't go to college. Or you did, but never finished. Maybe it's the thought of a big, intimidating campus. At Independence University, all classes are held online. Maybe it's the thought of being alone in a sea of students. At Independence U, you'll get a personal support team to help you every step of the way. Maybe it's the cost of all those books and supplies. Online means no books to buy. We even give you a new laptop and tablet to keep when you graduate. Maybe your life doesn't fit typical college classes. At Independence U, our online college fits your schedule. Let's meet a few students.
Independence University held my hand through the process.
Don't be afraid to take the leap because it has changed my life drastically.
Just take the first step and you can do it. If I did it, you can do it too.
At IU, there's no barriers to your degree.
800-535-9916.
Welcome back. We're talking to Daniel Klein of The Motley Fool. Dan, thanks so much for staying with us this morning.
Thanks for keeping me.
All right, Dan. So we talked about payday loans, the ethics around it. Maybe it's predatory. Again, we need to get more detail from someone within the industry. But let's talk about disruption, because we continually talk about on this network financial technology or fintech organizations, and in particular within your segment. What about disrupting this industry?
So there are some fintech companies trying to do this, and the one you're going to read about most is Square. Square has a product called Cash App, and Cash App is essentially a banking app for the unbanked. Jeff, it's something our younger friends are using. It's not it hasn't made its way into my world yet. I'm sure I'll get it at some point, because I'm lucky enough through my job to have a lot of friends in their 20s. So that's why I have Venmo. That's why I have some of these things. But what Cash App will do is they'll make you call it a payday loan at unfavorable compared to a normal loan, but very favorable terms compared to a typical payday loan. They'll charge you 5% interest, and they'll give you a 5-week grace period. It's a month plus a week. I'm not sure why they structure it that way, but let's call it 5 weeks. And then you start accruing interest at 1.25%. It is not great, because the interest rate, if you don't pay it back for a year, is quadruple what a credit card is.
Sure.
But that's better than the 400% some payday loans could be if you don't pay them back for a year. So it's a better product, but it's only one way to disrupt this whole business. So what's the problem here? The problem is people don't have enough money to pay their bills, and maybe it's because their paycheck cycle doesn't line up with their bill cycle. So what can companies do to allow this to stop? One of the things some companies are doing, and it's been tested by very, very big retailers, is, Jeff, you could opt to get paid on a 2-week cycle. Or you could say, hey, I have a company issued debit card, and I can go into the app, and I worked Wednesday, and I want to get paid for Wednesday. And then on Thursday, I'll wait. I want to get paid for Thursday through Saturday on Sunday. So that's a way where a company could take money you've already earned and sort of, look, we're no longer issuing paper paychecks. We're sort of building a whole system around something that doesn't happen anymore. And I know it. I looked at my bank account this week, and I went, why is it so low? And then I realized I forgot to pay myself. I use a payroll company, but I have to manually go in and say, hey, pay yourself. And I didn't do it. I just forgot. So I'm 10 days late on paying myself. So I paid myself, and then 3 days later, next Wednesday, I'll have to pay myself again, to issue on a Friday. So this gives you that control. Uber's doing something pretty innovative as well. So let's say you're an Uber driver, and a lot of Uber drivers, that's a tough existence. You have to work really hard, and you get up in the morning and you want to go Uber, but you don't have money for a tank of gas. You don't have money for a bagel to get you started, a cup of coffee to get you fueled throughout the day. Uber will make you a microloan to fill your tank of gas to go get some lunch, and then they'll just take it out of your earnings that day. So what does that do for Uber? It gets more people on the road. It gets more people making money. And look, you don't have to need it to do it that way. You could just say, hey, there's money in my wallet, but why not just have Uber front that money so I can get on the road? We need innovative programs like that. More employers, and we've talked about this before, should be helping their employees with microloans that keep them in the job. What does that mean? So you have a medical emergency, and you miss a week of work, and then you owe a bunch of money, and you go back to work, and you either have to take an unfavorable loan, or maybe you're forced out of your job. If your company loans you that money to pay off that medical bill at a very small amount, you're much more likely to stay. You're much more likely to stay out of that cycle of poverty where one bad thing causes you to fall off the cliff. So this is something that every big company should be looking at. How do I help my employees meet their basic needs? And sometimes it's just by moving around how they get paid, when they get paid, ability to take an advance at a very, very low interest rate from the company, which ties you to the company because you're not going to leave until you've paid it off. There's a lot of things we can be doing as a society, and fintech will be part of it. What Square is doing is good, but it's still not great. It's still, a fairly expensive loan at a time people need it the most. I'm glad it exists, and I think we're going to see more of this through fintech companies, but I'd like to see it at, very, very favorable rates, and maybe even a nonprofit where they're making enough money to keep the lights on and pay the expenses, but the goal isn't to make money off of this type of loan.
Yeah, I mean, hearing you describe what the fintechs could do in payday loans, what I heard is it's just lowering the rate, which I guess is a good thing. I don't think it gets us to where we need to be. I like the idea that you're describing, and I have heard of employee benefits organizations, people bolting this on to their employee benefits, generally for larger organizations to help those get money in advance, and I think it makes a lot of sense. Clearly, there's a need here, and I go back to that financial wellness. I hate using buzzwords, but I go back to that, and I think that we're at a point, and really the purpose behind this show and other organizations is about an education. We need people to understand the basic aspects of saving, of budgeting, of managing money. That's going to be critical, because if not, you can get yourself in a world of trouble.
Yeah, let me just, to get the last word here, say this is going to be a top-down transition in the business world. This is something that Walmart and Target have to do first. And when they do it, and they're testing it, so it is, they are being leaders in this. When they do it, it's going to become like mobile order and pay. Starbucks had to pave the way, and now they're a white label mobile order and pays. You and I could open a coffee shop tomorrow and for $19 a month have a mobile order and pay feature on our app. So this is something that a small store is not going to go out and create the technology to allow its workers. They're not even going to necessarily have the back end banking set up so they can, pay someone on Monday and Wednesday and Tuesday. But eventually their banks are going to get this. There are going to be third party apps that do this. This is going to be something that, say, like a Square is allowing for employers as they move into those areas like payroll, Quicken, other people who are big in this space. So this is coming, and it's a needed change, because again, why are we tied to a cycle that literally used to be my aunt, who is the CEO of my family business but was the CFO for a long time? She had to order the paychecks. She would order them from the bank and they'd show up 3 days later, and then she had a stamp and she had to sign all of them. There's no reason to be tied to that cycle. And I think over the next, I'll even say 18 months, we're going to see some big changes. And that's really good for people. Not having to borrow money at really high interest rates helps elevate people. And that should be the goal.
Absolutely. But Dan, always a pleasure talking with you. Really interesting topic. I'm glad we stepped on this one, or jumped on this one for this episode. Great talking with you. Have a great rest of the week. We'll talk to you again very soon.
Thanks, Jeff. I appreciate it.
And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Then drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, and more, all in one place, check out today's edition of The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a tax doctor now for a tax emergency analysis.
Call 800-224-6439.